behalf of Policy Exchange, may I welcome everybody here this evening. Just to be clear what we're going to be talking about, we're going to be talking about the venture funding of seed and early stage companies. And a couple of things have happened I want to bring you up to date on since this event was actually convened. The first one is, as probably most of you will have seen, the European Union has actually relented and decided not to visit the full rigors of AIFM on venture capital firms. So that is good news. And the other thing is very topical indeed, which is literally just within the last few hours, you probably won't have seen it. The Treasury has announced the start of a consultation program on the venture funding of seed and early stage companies. So there you are. If you ever wanted evidence of just how influential Policy Exchange are, the mere thought of a meeting of Policy Exchange is sufficient to flush out a major Whitehall initiative. It reminds me of the old Confucius proverb, which says, for a fire brigade to turn up 5 minutes after the fire is highly commendable, and to turn up 5 minutes before the fire is highly suspicious. There we go. Now let me introduce our panel. We have on your left, my right, Richard Anton from Amadeus, who is this year's chairman of the British Venture Capital Association. We have Bindi Karia from Microsoft, who is responsible for their startup program. And we have Charles Irving from Pond Ventures. And I should say both Richard and Charles have long been ambassadors for the venture capital industry here in the UK. They've both given very generously of their time, for example, to be guest speakers at my private equity module at CAS. Bindi may think she's escaped, but she's actually on my list of intended victims for future events. And actually, just something else before we start that struck me, and that is I was investing in venture capital funds in the 1990s, so I can remember both Amadeus and Pond starting, and I'm pretty certain they were both in 97. Is that right? Yes, 97. So here you are, two firms that are regarded as rightly as veterans of the venture industry here in the UK, and yet less than 15 years old, and that is one very significant difference that we might like to talk about as we go through the evening. So, what we're going to be talking about is essentially looking at America to a certain extent, discussing why early stage venture has been so successful in America. I think you all saw the stats in the introduction to this event. Companies which were originally venture-backed contribute 21% of American GDP. And yet annual venture investment in America is only about 0.02% of GDP. So that is an enormous economic multiplier which America has had the benefit of and we not. And what I'd like to do is we will talk on the panel here probably for about 25-30 minutes or so, and then we'll throw it open to the room. Just to discuss why that has been, what the essential differences have been, and what we can do here in the UK, perhaps to create a more attractive playing field. So there we are. Well, maybe we should sort of tease out one issue at a time. Maybe Richard starts with one and then passes the baton to Bindi and so on.
Okay, sure. Where would you like to start?
Up to you.
Why the US has been successful?
Well, I guess, I mean, one aspect of that.
Yeah, sure. It was in the right place at the right time. The venture industry in the US got going in the 1950s, started by a Frenchman. So it's a much older industry than in the UK. In the UK, the venture industry began at the beginning of the Thatcher period, right at the start of the 1980s. There hadn't been an institutional venture capital sector at all before that time. The US industry then became mature by the time that the IT wave hit. IT was a very good industry for venture. Other industries were good as well, but IT was very good because it was very capital efficient. A lot of innovation was some funded by venture, some funded bootstrapped or funded by angels, by individuals. And that industry grew very fast in a capital efficient way, generated returns, and then the industry got going. And then it hit its downturn cycle at the beginning of the 90s. There was the sort of doom and gloom that people talk about venture today in Europe. That you could almost lift the quotes from books and papers of the early 90s in the US, and that industry then went on its next sort of 10-year up part of its cycle before going down the past sort of spectacularly poor last 10 years. So it's a business with a 20-year cycle. But essentially, the US industry was in the right place at the right time to fund innovation, and then the venture sector was able to acquire critical mass and get a virtuous circle.
First of all, I'm not an investor, just wanted to put that out there, but what I do is I run the Microsoft BizSpark program in the UK. The accent is Canadian, so I think I've sort of spent a lot of time on that side of the pond and this side of the pond. The other thing is I run in a scene of young entrepreneurs here, and they're constantly talking about, do we move to San Fran or don't we? And I've actually seen, witnessed, and been part of decisions where entrepreneurs have chosen to wholly relocate to the West Coast. And I guess the trend that I'm seeing, there's, just so you know, there's about 2,500 companies in BizSpark in the UK. That started at zero 2.5 years ago. So I really spend a lot of time talking to entrepreneurs. And I think the comment I make is it's the attitude to risk on both coasts, here versus there. And I guess I know both of you having invested on both sides of the pond, it is about people are willing to back an idea on the West Coast. They're willing to back something a lot earlier stage on the West Coast. They're willing to take a punt. And I also believe that the entrepreneur is the entrepreneur. They're the same here as they are on the West Coast, in my observation and based on who I've worked with. They just back ideas at an earlier stage in the US. Here, entrepreneurs I know that haven't been backed tend to not be backed because they haven't had a proven business model, they haven't been able to necessarily achieve traction, they haven't proved it as compared to the West Coast. And to me, it's really a different attitude to risk. And I don't know if that's cultural, you know, my gut feel is it's partially that way, but it is based on a lot of conversations that I've heard. So that's sort of one of the big differences I'm finding. And I'll give you one example. I was at an event last night funded by UKTI, Tech Pitch 4.5. And the winner, very silently, 2 or 3 of us said, great idea, probably won't get back to you, go to the West Coast, because we think it will. Go to Dave McClure and 500 Startups, go to your angels over there. Actually, your idea probably will fly, go West. And he was quite perturbed by that. Bit of a controversial point of view, but I'm seeing it day in and day out, particularly with the young entrepreneurs.
I violently agree with half of what you said, and violently disagree with half of what you said. But Charles, let's come back to Charles, he's been on board.
We're called Pond, we operate on both sides of the pond, so we have partners in Silicon Valley and we have partners in the UK. But we're essentially we invest in Europe because that's where we think the opportunity is. But I think really what it comes down to, I agree entirely with what you say, and it comes down to the qualification of the investor. And so in the US, and increasingly I'm pleased to say here, but fundamentally in the US, the people who are investing are not stiff shirts from the city. They're people who have operated, run their own companies, put their own money on the table, and they partner with the entrepreneur to make it happen. Here, just to quote somebody, when we started in 1997, I have to say that person was an X3I person, the classic X3I person of that era. And he said, you know, these entrepreneurs, they're out to screw you and steal your money. And that was the whole attitude, as opposed to let's get round the table and let's make it happen. And so you know, our team, for example, are all people in the industry, all successful people who created businesses, who can roll up their sleeves and make it happen. And that's fundamentally this. And that way, you know, you're qualified to take the risk on because you understand the business, you understand what the roadmap is, you know who's going to buy the product at what price, so you can make that judgment call very early on.
So, the bit I agree with is that entrepreneurs are exactly the same here as they are in the US. I don't see any difference in attitude to risk, propensity to do startups, and not materially. If you look at surveys, the attitude to start a business and taking that risk. The US is ahead, but not materially. So we have lots of other skills here, particularly strong scientific skills across Europe, and then in the UK those are very, very strong. So I agree with Charles that in 1997, the vast majority of the venture capital and private equity industry was financial types who learned accounting and learned finance in banks and so on. And today that's absolutely not the case. My firm is exactly the same as yours. My background is in operating background. So are our peers in most other venture firms. When we started, and I think, and I know Charles, this firm did the same, we differentiated ourselves against VI by saying, we do Silicon Valley style venture capital, we all have operating backgrounds, we've been on the entrepreneur side of the table, let's get around the table together and make it happen. So if you look at the industry in the UK today, those are the type of people that are in the industry.
But they're very rare, you see, this is the problem, they're very rare. I know, because when we want to hire somebody, I'm actually talking to people in Israel, because these guys have got the operating experience, and moving in London to actually work for us here, because I can't find high quality people here who have that. It's a very subtle and difficult mix, that operating experience, but being a good investor at the same time. A really good and successful CEO is not necessarily a good investor.
But there is one trend I'm starting to notice, despite the fact that all the kids are moving out west. And what I would say is I'm starting to see more entrepreneurs backing entrepreneurs. So the startup funds like co-founders. There's one or two incubators I know from the Valley who are looking at starting here. Seed Camp, folks like Springboard. They're starting to pop up. But people still feel that their idea tends to get backed further out west.
So I'll say why I disagree with you, and it's the reason for that. And the reason I disagree with you is if you look at pro-founders, and I agree with you that there are agents doing that today, and you look at Pond nowadays from 10, 12 years ago, and the other peers in the venture firm, you see similar sorts of people in those firms who have similar attitudes to investing in early stage businesses. The but is there's so little capital in this country, and what sort of Charles and I and all of our peers in the venture industry face is an antipathy towards our asset class from investors. That means that there's much less capital in venture capital in Europe generally and in the UK compared with the US. And guess what? If you can get the same return for lower risk, you'd be mad not to do that when you're investing somebody else's money. It just doesn't make sense to take high risk when you can select the same return but lower risk options. And so that's where it's supply and demand of capital that's moved the industry that's moved the venture industry to going for lower risk options. And I'd say not enough businesses are being funded because there isn't enough capital in the market. So I think the conclusion about
the comment I'm making.
it's backing the point we're making about going west because that's where the capital is, but it's not the desired behaviour. The desired behaviour is the same as the West Coast. You lack the capital to replicate.
No, and what I will say is, again, the entrepreneurs that I speak to, one, she started a business. She doesn't want to move west. She actually wants to stay in Europe. But the people that are offering her money are all in San Fran. And so she's going to go out west for a year, maybe to set up the business, get a co-founder on the West Coast, and come back and launch the business in Europe. But the money is being offered over there. So, we're violently in agreement.
Yeah, I think I would also echo that we have really good entrepreneurs here. We have really good engineers here. And we have really good, for us, the unsung heroes in the business, marketing people here. Marketing people are extremely valuable. If you're a great technology guy, you've got to be able to sell something. You need good marketing people to tell you what to sell it. And that's hugely undervalued. But just on the funding, my biggest worry at the moment, and I think it's a really serious problem that we have in the UK, we have a window of opportunity, which I think is as short as 10 to 15 years, where in many areas we are leaders in science and technology. Very quickly, that position is being eroded, because other countries are as brighter than we are, and they're overtaking us. Sure, we will always be ahead in 1 or 2 or 3 different areas, but I honestly believe that if we don't commercialize our intellectual property in the next 10 to 15 years, our role in life, frankly, all of us should go out and buy yeoman's outfits, because we're just going to be showing tourists around a theme park. That's our asset today is a lead in many scientific areas, and we're losing that. We'll lose that unless we actually fund these things.
Actually, just give me 1 minute. Charles is actually raising a very, very interesting point here, and that is if you look back to, say, the beginning of the 20th century, just about every major invention and discovery has been made in Europe, but commercialized in America. So we don't have a problem as Europeans, as Brits, whatever it may be, with inventing things or discovering things. We do have a huge problem commercializing. Maybe we could just talk to that. I mean, why do you think?
Well, there has been a sea change in that, and what Charles mentioned about serial entrepreneurs and marketing, particularly product management, product strategy people, has developed here very nicely. So I give you a data point. So Amades's first fund, which we invested between 1980 and 2000, having started up in 97, one in 6 of the companies that we backed, we were investing behind a serial entrepreneur. And from our current we're just in the closing stages of investing, we've been investing over the past 5 years. The figure was 70% of the companies we backed are behind, we're investing behind serial entrepreneurs. And if you look at the data in the US, and the US has a large enough data set that you can measure this, as a number of academics like Josh Sherman at Harvard have done, and Paul Gompers as well. You see that the best predictor of investment success is the presence of a successful serial entrepreneur leading that company. It's the best of all the factors as a sort of predictor of a successful outcome. So we do actually have that now. So whatever the reasons why the commercialization hasn't been as strong in Europe, it absolutely hasn't been as strong in Europe. I think that's going to change because of the presence of these serial entrepreneurs.
I think you have to put it.
I was just going to actually just say one other observation that I've been making, and it'd be really interesting to hear your points of view on this, is actually what I'm hearing is there's actually a distinct lack of technical talent. And why don't we teach our kids to code and be technical in schools? And a lot of guys I know are moving out as well because they find the technical skill sets they need. And some of the things we're doing at Microsoft are really about skilling and IT apprenticeships and software apprenticeships to teach just the more basic skills of coding. And time again, the CEOs and the founders who, again, the ones I work with very closely, they do tend to be serial entrepreneurs, have had 1 or 2 really good exits in the past. Time and time again, I get the call, do you know any good coders? And there is a distinct lack in some of the observation with the companies I've worked with. So I think we also have to think about skilling our people up from a much younger age.
To what extent are people still looking at sort of India and Israel for those skills because they don't exist here? Is that something that's still happening?
Well, in our case, we have several software teams in Ukraine and Romania and the Czech Republic.
Yeah, I see.
It's actually cheaper. It's cheaper. But this is kind of almost grunge work. I would say there's not a huge short. I mean, the quality of people. I mean, that's one of our assets. And that's why we invest here. The quality of people in this country is good.
Yeah.
To scale up,
just
I
not
agree.
enough.
Not enough to scale. But that's fine. That's the world, wherever you are. And just on the when we talk about the US, we should put this in context a little bit. The venture return numbers in the US, if you take the whole US compared to Europe, are as bad as in Europe. So everyone talks about the US. Believe me, Silicon Valley, yes. If you go to anywhere else in the US, it's as bad as it is here. And this business tends to, you only hear about the success stories, you only hear about the Facebooks and all the rest of it. But there's an awful lot of failure out there as well. And I don't think actually, and that's why we invest here, I don't want to be the same as the US. You can do better deals in this country than you can in the US. It's cheaper. You can build companies for less money, and as long as you're globally minded, this is a great place to invest. So this whole thing about the US is better than here, in many cases is not true. Where it is true is that they've had more bigger success stories, which everyone talks about. And that, I think, is a question of scale, the size of the economy. So let's not get carried away too much about the US is better than here. We have equally good people here to back.
Completely agree. So one thing we all do seem to agree on is that there's dramatically more capital available in
about $40 billion to raise. Yeah. Why is it, do you think, that institutional investors in America are queuing up to put money into venture funds and yet not in Europe, and specifically not in the UK?
In the US, there's a memory. So Charles has pointed out about venture returns. Actually, if you include Silicon Valley, venture returns in the US have been quite similar to here since 1998. So the blockbuster venture returns that people associate, investors particularly associate in the US, could predate the dot-com bubble. But there was a decade of those in the 90s, and they were real blockbusters. So people have that in their psychology that when we began our venture program, which may have been in the mid-80s or sometimes between the mid-80s and mid-90s, their first experiences were really good, and then they were repeated until we moved into the bubble period. The venture industry here restarted basically at about 97 and the desk and came into business and others, because there'd been the start I mentioned during the Thatcher period that didn't really work. It was people by financial types, and the industry migrated to buyouts, which those people had appropriate skill sets. And so there was a restart when our firms came into existence, and not enough time for lots of good returns to build up before that bubble hit. And that means that institutional investors that had put dipped their toe into the water in Europe, not just in the UK, that had their first experiences in the aftermath of the bubble. So their first experiences were lousy. And guess what? Their experiences at the same time in the US were lousy, but they've had a decade plus of good history to put into context again. So I think that's frankly, I think that's a major reason.
Now, let's be blunt about it. When European investors came in 2000, 2001, they came in on the back of huge profits made in the boom time. They weren't part of that. They invested and they lost big money. The results for this asset class stink because they just came into that moment. If you look at the current funds, the 2005, 2006 vintages, actually, if you actually look under the bonnet, the asset class is looking very good, very good. Our fund is extremely good, and I know other people's is as well. So it is the cycle. But the reality is, when we go out and raise our fourth fund, we know it's going to be extremely tough because, first of all, the history has been terrible, the results, because of timing. And secondly, time has passed on. The fashion has moved on. You go and speak to a pension fund and they say, well, if you're not in India and China, forget it. Our advisors are telling us that's where we should be. The boat has left, the herd has moved on.
It's very ironic. I mean, I'll give you another data point. I did the homework for this and looked at our portfolio. So we've got 22 companies that have got meaningful revenues above 1 million. So the average revenue is now £25 million for those companies across the 22. So the average organic growth rate year on year is just over 40% for those companies. The top quartiles, so the top six of them are growing at just over 80% year on year. Just over half of them are profitable. I mean, these are really strong figures. And when I chat with people like Charles and our other peers in the venture industry, I don't know their figures like I just disclosed to you, but I hear exactly the same story. We've got phenomenal underlying performance of business, which makes people like Charles and me really, really optimistic about the companies that we're going to produce and the returns that we're going to produce for our investors over the next 5+ years. But at the same time, really pessimistic about fundraising for the reasons Charles just articulated.
I mean, just to put that in perspective, for those of you who don't know the industry that well, you're looking at representatives of two very successful firms. But across the industry as a whole, the story is very different. I did some work about 1.5 years ago for the Nordic Council of Ministers, and I looked at various vintages, in other words, the number of funds that were raised in each year. And I can remember one example. In the year 2000, I think there were over 200 European venture capital firms raised, and I think from memory, that there were only 11 of them still in operation. So we're talking about a what has been anyway, a very binary industry with some hugely successful firms, but also a lot of unsuccessful ones. Yes. Can you just hold it for one moment? I'm anxious to move to the floor because I know a lot of people have a lot of questions, but I just want to put one last question to each member of the panel. And it's really a very simple one, and then I will open it up to the floor. If you were benevolent dictator of the UK, what would you do to try to improve the environment for early stage venture funding?
Make pension funds invest in
Amazing.
Well, I'm a dictator.
Yes. Excellent. Excellent. I love it. Yes. Okay. Indeed.
More money.
Yeah, but from whom? From government, from pension funds, from the taxpayer, from banks?
I guess more money from people willing to invest in early stage.
There's
So
people
more.
aren't willing to invest. What are you going to do?
Well, I'm the dictator.
You're going to apply the electrodes.
I'm a dictator, so what I would say is take a punt and invest in early stage companies.
What I would do is actually very simple, and money is already there. As penance for screwing up the banking system, I think some of the banks agreed to set up something called the Business Growth Fund, which is allegedly £2.5 billion to be employed in growth companies who already have 10 to 100 million pounds turnover. So that's where they are supposed to be investing in. If any of my companies have a turnover of 10 to 100 million pounds turnover, I promise you they can raise money from anywhere. They don't need to take private equity from.
Yeah.
So I don't even have to be a dictator. I think I'm going to start parading outside in Parliament Square on this, because I think it's completely obscene that this money is not being allocated to where real growth is. And that money on commercial terms, not on soft terms, on commercial terms, that money should, not all of it, relatively small amount, anywhere between 200 and 500 million pounds, should be allocated to qualified early stage investors who should receive that money on absolute commercial terms. So that's a very practical thing, and I've been talking to people, and they think I'm going to win. But I think
Keep
it's
blowing.
insane.
Keep blowing.
Yeah,
Absolutely.
Sadly, much too sensible ever to be adopted, actually. But there we are. All right, as promised, I will open it up to the floor, please. Oh, by the way, can you please just identify yourself quickly and say, if appropriate, which organisation you're from?
So my name is Steve Potmore, and I have something called Transform Capital Management. We're launching what we call a global impact investment bank, and that will include a £1.5 billion public-private partnership fund that we're looking to do in the UK that is designed to re-engineer the early stage investment piece. I've been fascinated by this panel. I think there's really interesting points that come out. But I take exception with a couple, and I agree with a couple. I think what Bindi says is really interesting in terms of the risk culture and being able to take a punt. Unfortunately, you can't translate a risk culture overnight, and nobody likes to write checks for ideas in this country. I've been working on them for 12 years in different forms, and I can tell you that they don't. You don't get a meeting, you don't get a sensible, objective hearing, go away, come back when you're further down the line.
We do, sorry.
Charles, respectfully, Amadeus have said no to me several times, Herman and others, and so have you. So in fairness, you don't. You do for a very small number of deals, you do.
And I can say that for the 2,500. There's a lot of
And I'm not knocking, Charles. I think what you're doing is fantastic, and I like what Amadeus does. But what I believe is we need joined up thinking. We need to have a proxy for that risk culture, and that is a better system. Unfortunately, the venture industry has not come a long way since its inception. It's the 220, 10-year model. And unfortunately, what it looks for is high intellectual property, low capital intensity, silver bullet solutions. What I'm interested in is how we solve the big issues of modern times. And we do that with an economic system that enables innovation that looks like a food chain in nature, vibrant and dynamic. So to do that, you've got to have pooled capital, you've got to have aggregate funds, you've got to have a lower cost of capital by blended. I agree with the issue around institutions are risk averse because the industry has failed. One could argue that there are the top 10, 20% that have succeeded, and there are, but broadly the industry has failed. So ever likely they're running to short-term speculation to make more returns. So the way to change that is system innovation on finance. You need scale to do that, and you need not only just to invest, you need to have an industry that makes good on the promise that we're not going to invest only, we're going to add value. But if you look at the number of venture capital funds that really add value and have people on payroll to do that in a broad number of sectors, it never happens. We'll make a few phone calls, sit on the board for long enough to piss you off, but not enough to really understand the business. There are exceptions, and I guess it's a rant, not a question. But my question is to the audience, and that is, does anyone agree with what I've just talked about? Now, with great respect, I think this industry can lead, but you've got to start looking outside the industry for the solutions, and those are how to reinvent the industry. And unfortunately, as most innovation does not come from inside the current thinking, unfortunately, I don't believe the way to reinvent venture capital and seed and early stage comes from the existing industry.
Okay, thank you for that. Anybody else? Yes, lady behind you.
Hi, I'm Anne Griffiths. I consider myself a public sector entrepreneur, and so my question is around that actually. On the inventing and commercializing split, how we invent lots of good ideas, I think part of the reason for that is that the culture of the UK still has vast swathes who are really apologetic about commercialising and making profit from the things that they want to achieve, and nowhere is that true of the public sector. And ditto the approach to risk and the dislike of actually investing in things that are quite risky. I wondered if you saw any opportunities in actually private investment in public services and social businesses as quite an area of opening up opportunity at the moment, because I think there's quite a lot of the public sector that wants to make profits.
Thank you for that. I think that's a really
Isn't
important
that
question.
what Channel 4 did? They'd set up a fund that didn't quite work out, but the fund was to invest in innovation and digital media that was going to impact the public sector. But I think that didn't work
Well,
out.
it's the social investment area, which none of the three of us do. We know people who do that. I give you an example, British Community Ventures, which is a London-based firm that invests in the kind of things that you're talking about, very successful. And I agree that there are nice opportunities. Now, I was just looking at a business of theirs today, which is called Gym, which I believe is a gym. Come across it, it's like a regular gym at half the price, because it's like comparing a Ryanair or EasyJet plane to British Airways plane. And then reduce the cost of operating it that way. And it's a really nice model, growing very fast. So, great example of that kind of social.
I think we are social investors. One thing that gives me a big buzz is going to see one of our portfolio companies and seeing 100 cars in the car park, and knowing that 2 years prior there was one guy or girl with a business plan written on the back of an envelope, and you'd actually got together and built a company. That, I think, is why we are in this. I mean, money aside, the biggest kick is actually being seeing real growth, real wealth created. Now, I think, just to address your question, to be very blunt, what we're really looking for is not necessarily the technology. Obviously, whatever the idea is has to be big and scalable. That's what we're looking for. But essentially, what do we invest in? We invest in exceptional people. That's what it all comes down to. Read as many books as you want. Believe me, that's what it all comes down to, is finding exceptional people to back. And so whether it's, and in government, I mean, that's one of the biggest markets around. So if we can find exceptional people that can plug into that existing market, this is a great business.
There's a nice opportunity investing in outcomes-based solutions like reducing reoffending rates and that kind of thing. The public sector could create that and gain benefit of that. I think that creates a whole set of opportunities around that.
And hasn't the Cabinet Office just recently launched an initiative of what's it called, the Innovation Exchange, and they've actually shortlisted 9 interesting companies that will make a massive impact on spending in the public sector. And I happen to know one of the entrepreneurs, and what he is doing is saving tens of millions of pounds for the public sector. but he comes from a public sector background. So I'm aware of government initiatives.
How does he get incentivized?
Makes money.
Was that what you were asking about?
There's quite a lot we can use solidarity as well.
Yeah.
And I think my perspective is that there's a lot of opportunities by things that are currently public services that could be commercialised
Right.
like this.
Yeah.
And there's a
Okay.
big untapped opportunity.
Yeah.
I mean, I think this is, I mean, Richard's partner, Hauser, very good at also campaigning, is when government buys, they should buy from SMEs, UK companies. They should, make that a priority.
Oh,
I've
that's
got
actually
actually,
excellent.
yeah, just on that point, we do have to, I'll come to you next. Ernie, could you just tell us very quickly about this procurement point?
Sorry, my name's Ernie
I think it's
Richardson.
important.
I'm an ex-venture capitalist. The thing that transforms small companies' business, it isn't venture capital, it isn't soft money, it isn't initiatives. What teaches small companies to become big companies is contracts, business. That's the critical condition. Daydreaming about being a dictator, what would you do? Mandate 25% of the government expenditure have to be for protection of SMEs and wash away all the kind of European restrictions on state aid and all that kind of crap. But the key to the procurement issue, it's interesting you mentioned the innovation. It's called the Innovation Launchpad.
That's it, sorry.
It's a wonderful scheme. Comes to
It's nice.
fruition in about 2 weeks' time. The only problem is when you actually ask the Cabinet Office, does this mean that these companies can short-circuit the procurement process? The answer is no. So having identified the savings that can be made, they've then got to go back to through the whole pre-PQQ process, fill in 40 pages of documentation, fill in your health and safety policy, fill in, it's nonsense. It really is nonsense. I think that and it is interesting that one of the benefits I think the US has is a much more aggressive approach to the use of SMEs in government procurement. Many of them are kind of venture-backed, very high technology companies.
Israel the same.
Is absolutely right. And
They
I
give
think
priority to
we're
local
hidebound by this kind of fixation about mandating procurement levels equal state aid, and therefore we can't do it. It's nonsense.
We've had such a frustrating time, and I get frustrated as a taxpayer with portfolio companies that sell, for example, into the defence sector, into the MOD, and their product is right at the heart of what's needed to be done, the solution that's needed, and then we end up going to HP, EDS, all these things, and they build some massive. Well, actually, Microsoft isn't.
I was waiting for that.
Microsoft isn't guilty of this in my opinion, but maybe they are in others. I don't know. And why don't they just go to the SME, to this UK-based SME that's got this fabulous?
And I'm 100% in agreement with you guys. I mean, the fact that one of the entrepreneurs I work closely with was shortlisted in that group of 9. I mean, it's exceptional, and he is a very small business. There's only 5, and he's I do wish him luck through that process.
Okay, gentleman behind Ernie,
Yes.
left shoulder. And then
James Stewart, DCI, we're a private equity firm. I just wondered with Microsoft on the panel and 2 venture capitalists, whether or not it's possible to look at IP coming out of larger UK companies and commercializing IP more effectively hand in hand with venture capital, because it does give a commercial structure and an opportunity, and whether or not the UK can exploit more IP by working more closely with the venture capital community.
A couple of comments I'd make to that. A lot of the role I perform at Microsoft is just being the eyes and ears on the ground. So quite often, I spend a lot of time with our M&A guys, our product guys, and I get an idea of the gaps in our portfolio. So buy, build, and partner. And I will bring in the SMEs to do that. A really good example of that is we're launching Windows 8 next year. Right now, I'm proactively hunting for really cool early stage tech companies to take to LA for the Build conference, which is in September. So it is about finding innovation, fostering innovation with our technology, and bringing them into the fold. In terms of how we commercialize, obviously there's Microsoft Research in Cambridge, and there's a lot of IP that we tend not to use. So on occasion, we will do IP licensing deals. There's one company in Cambridge that's still struggling, but have you both heard of Wave? A TTP Ventures, joint venture with the former sort of Microsoft IP arm. And really what we'll do is we'll work to license that IP to allow people to commercialize it. I think next things that we need to do, and we haven't yet, is work with the VCs saying we do have these tremendous amounts of IP available, let's commercialize it. But we have tried it, it hasn't worked, but it is something that, you know,
Why
ideally
doesn't it work?
I think the IP ventures aren't that we launched. We, first of all, you know, categorically, we don't do venture capital. We partner with VCs. They're the experts, we aren't. We're a software company, we're a platform company. We provide the building blocks to the tech companies to build their businesses on. It just hasn't worked. So we've done maybe 2-3 deals in EMEA, one in the US. It just hasn't worked, and it hasn't been a priority.
As I said, it's in the bottleneck. I mean, we have no shortage of good IP. So,
But I think, you know, we actively talk to large corporations and formally and more interestingly, informally, to frustrated engineers who are working in a large corporation who would like to spin out. And increasingly, as companies are becoming under more and more pressure to improve their balance sheets, they themselves are more supportive of spinning out technology and taking it out of their balance sheets, and actually having quite sophisticated buyback options as well, if the thing works. So they, in a way, become non-financial sort of stakeholders. So yeah, a lot of that goes on, and so it's good fun. The biggest barrier is big company, small company mentality. Sometimes you find people want to get out, start up and spin out, but actually when they have to sort of, you know, start booking their own flights and things like that, and they kind of get lost amongst the paperclips.
I have an interesting anecdote which I'd like to share. So obviously it's been a tough few years, and I don't know if we're yet coming out of it, but the entrepreneurs I see joining the BizSpark program, because literally what the program means is you get all the software you want from us for free to help you build your products at no cost. And I see a lot of folks who have been made redundant, engineers from the city, from large corporates, and they actually realize this is their opportunity to start a business. So I've seen a heck of a lot of that. I think what's more interesting to me is the amount of Microsofties I meet, the technical Microsofties who say, I'm joining BizSpark and I'm going to start a business. And I've seen at least 4 in the last 3 months that have gone out and started their own business, had a great idea, and they're now using their knowledge of the Microsoft platform to create a really interesting business. And I'm seeing that definitely as a trend within just the 2,500 in the UK, and there's 40,000 worldwide in our program. So it is a trend we're all noticing worldwide.
Okay, gentlemen down here, just hand up sometime here. Just here. Sorry. Yes.
Oh, sorry, yes.
Didn't want to ask?
Yes, sorry.
We do now.
My name is Todd Cardy. I'm a journalist. I write for Business Excel magazine. We look at this area, and I also edit Growth Business. There's been a real big push recently for accelerator programs. Lots of little companies across the country, projects, and they're really pumping quite small amounts of money, not a large amount into it. But I just want to see what your thoughts are on these startups joining these accelerator programs, whether they're going to work in 5-10 years, and there's a lot of constrictions that they get placed on. So I want to see what you think about it.
When you say accelerator programs, do you mean like incubators? Or
Yeah, that sort of, these...
Sort of like the Y Combinator style?
Yeah,
or,
that's right.
Okay, let's take that. Thank you.
Well, obviously I partner with all the ones in the UK, and we obviously partner with the ones in the US. So I can only talk from my experience with what I've seen with CCAM and Springboard. They're nurturing environments in a way, and they give you access to a massive network. And that's never a bad thing. So I know a lot of startups that have gone through just the one-day CCAP in London, and it's given them access to incredible mentors. So marketing, PR, financial investor, et cetera, et cetera. And it's given them access to a network that they probably would have never had. So it's actually helped them accelerate their business. And then the kind of software that we provide will help cut on their operational costs. So I personally see it as quite beneficial. And ditto for Springboard. Springboard's more of a, I don't know if either of you mentored there yet, but it's a 13-week program and it's pretty intense. So I ran a Microsoft day there and I bought 4 of my product guys in and wheeled them through and said, this is a product that you can think about building on. We can give that to you, the software for free, blah, 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 blah. And he's wheeling all the big corporates through. So I kind of view it as reasonably beneficial for these entrepreneurs. And it's interesting because I've gone in sort of week 1 and then I've come to see them again in sort of, they're about week 4 or 5. And already they're pivoting the business idea. They're really learning from mentors and they continue to grow and iterate. So I look forward to the investor day end of July. I personally think they're quite beneficial, but I partner with them.
I'm particularly interested in the mentoring of entrepreneurs
I think it's
as a future aspect. That's the really critical thing. The rest of it is, it's nice on the margin, but it's all about the entrepreneur. The entrepreneur is the hero, and they need to be, your shoe needs to be developed.
Hey, if you're an entrepreneur, it's really tough to raise any money. It's really tough to get any help. It's a very lonely,
You're super lonely.
very lonely place to be. So grab whatever you can. I think the rub happens just after that first period of euphoria. And maybe you are getting some traction with your idea, and that's where the big problem is: raising serious money, making your company global, scaling it, and that's the tough bit. I mean, all of us, I'm sure, we've all got relatives at home or whatever, and even the dogs have great ideas. It's easy to think of great ideas, but boy, the real rub is that 5-year execution period. That's the tough bit, and that's where the entrepreneur really needs every bit of help they can get.
And the mentoring really helps. And so, an example of what I do with my community is I'll do regular events. And they just like meeting each other because they're so lonely. They're so busy, focused on their business. And what I see are CEOs talking to CEOs and mentoring each other because they each have different strengths. I see another trend is a lot of co-founders. So I have a portfolio of what I call Premier League BizSpark companies, BizSpark ones, and all 9 of them are co-founded. So there's a yin to the yang. And it's a community and they help each other. And it sounds a little bit idealistic, but it really helps them. They meet people, who are in a similar situation. We're seeing things like Tech Hub pop up in East London, the whole Tech City East initiative. And I came in,
It's like an allotment, really, isn't it?
Yeah. No, I came into this role 2008, and there's nothing. It was a bit dry, and people were doing their own thing. And I fast forward to now, and it really is a community, and it really is a family. And these guys go traveling away with each other. They actually will do seminars on the slopes. A lot of deals and discussions happening on the chairlifts. And they will sit and they'll go off-site and talk. And I know that they'll support each other through their businesses.
Okay, I want to try and fit in 2 or 3 more quick questions for that. David, you're next.
As hard as fundraising is, I would actually argue that you guys have got too much money. And that people that actually need the support of the people who need a few £100,000, which you guys won't do. Certainly,
We will.
Certainly that was the way that we set up our business. And the vast majority of businesses don't need 5 million, 10 million, whatever it is, which is the normal sort of size that people will play.
Yeah.
Those are not startup businesses. Those are businesses that have come a long way. The actual entrepreneurs need the angels. The BBCA and other organisations do nothing for angels, but yet those guys are your future deals.
Yeah,
I have a pipeline for those two.
That is the sort of place that people, in my view, should actually be concentrating.
Yeah.
So
just so you know where we are, we put in $500,000. That's where we start, and most of our companies, we only invest in startups. Often the company doesn't exist; it's a founder with a right idea. So we do go in very early. And how much money these companies need? Well, if you want to be a really successful company, I agree. Sometimes you can be very capital efficient. If you're a software company, you only need $5 million. One example, which is doing wonderfully well. If you're into a semiconductor company, then you're going to need 50 million. So it's all horses for horses. But I agree. I mean, we should be just concentrating all of our efforts and money right at the beginning, because that's where you're going to create growth. That's where you're going to create wealth, and that's where you're going to create synergy for the society.
So I'm going to be contentious here. So why I agree that you need to start up investing, and my firm also does that. We have a seed fund that invests in hundreds of thousands at the same stage as Charles. Our most recent investment, which we closed last week, was in a new company. It's an Anglo-Israeli startup in a web-based business. It was a £600,000 investment. So we do that. But actually, if you compare the figures in the UK to the US, even to Silicon Valley, we don't have a competitive disadvantage, a comparative disadvantage in the number of startups that we fund. It's a general perception that we do, and it's a fantasy. We don't. We're similar. Where we're massively different is in the amount of capital going into those businesses as they scale up. On average, we invest about a third as much money, and then this is true across the businesses scale up. And guess why they don't do as well competing with their American peers? And that's what the stats say. So it is tough to raise in the hundreds of thousands, and it is tough in the US as well.
Okay, we'll come down to the front of this gentleman, and then we'll go back.
Hi, my name's Matthew, and I also work in the public sector. I'm interested in your approaches to risk and exploring those points around risk and risk-taking that you touched on a little bit earlier, because I picked up on some kind of mixed messages. That on the one hand, you're talking about starting early and funding people with ideas in the back of envelopes, which sounds fantastic, but on the other, making reference to things like good predictors being serial entrepreneurship, and that by implication, something that you would look for is things like track record, and that being criteria that would inform how you take risks. So I guess what I'm asking is how you guys take risks, what sets you apart from some of the others in this area, to what extent is that responsible for your relative success by comparison to some of the others in your kind of area as well, just kind of what you go by and what you sort of look for.
People, and that's what it's all about. And we spend an enormous amount of time. Let me give you the numbers to give you perspective. They're horrible, but we probably see 500 to 600 deals a year, and that's deals coming through the internet, business plans, executive summaries. We trim a load of those out. We start meeting people. And then pretty quickly, and that's I think what's our skill, and we don't get it right all the time. I'm sure we turn down the Beatles several times a year. But once you start drilling in, then you spend an enormous amount of time with those people. And you really understand them. And that's the risk. That is the risk. And whether they've succeeded or failed, we give equal weighting to failure as to success. Because, boy, they've learned a lot, providing that person has got what we... Silly example, but we use this internally. My partner in America had a problem with rats in his house. He called up the rat catcher. The rat catcher got out of the car. Ken looked at him. The guy looked like a rat. He smelled like a rat. He moved like a rat. He knew that guy would catch the rat. And now, when we're investing in companies, so we just invested in a company in the water energy nexus area, that person knows that business inside out. They sleep, dream, eat that business day in and day out. The same thing with a software company in the video advertising area. So it's getting to know those people, and that requires a huge amount of time. And it's not the stuff that you get on business plans. Business plans are you can buy them fictional novels at the airport. It's all about the chemistry and trust and mutual relationship. It's not patronizing investor. It's actually getting together. Let's both buy in on this.
Can I ask, how much do you actually...
Sorry, I've got to get another people.
Can I speak to that,
Yeah.
that one as well? Because I'd like to expose another fallacy. There's a fallacy, a very widely believed fallacy, that in the US failure is, given and here it isn't. And I think that's absolutely bollocks. Because if you believe that, you've also got to believe that Americans ignore the irrefutable academic research that says that successful serial entrepreneurs are the best predictor of investment success. And I don't think anybody in their right mind thinks that smart American investors ignore really the evidence. They don't. They follow it. So the kind of the archetyped ponytailed, very young, Larry Page or Sergey Brin are the exceptions. They're not the norm. Okay. So actually, I completely agree with what Charles says. The people at the hospital and the example of the business we backed just last week. The guy behind that is an Israeli who started an artificial intelligence company in Israel that was not really successful, moved to the Valley, started an e-commerce software company that was extremely successful, moved to London, started a mobile software company that failed. So he had 2 out of 3 successes in the move back to this time, so he does have 2 out of 3 successes. So actually the criteria of being a successful serial entrepreneur is probably a success. So you're more successful.
And it's not rocket science, and all of your lives and our lives, every day we're assessing, if you hire a gardener or a nanny or whatever, you're making those assessments on, it's a bit, if you're hiring a nanny to look after your kids, what more valuable job can they do? So it's that kind of, gut feel. Do you trust or not trust? Is the person a flake or not a flake? Do they have the dream to make it happen?
To speak to
it's all that sort of stuff.
You also asked about risk, and that's a really interesting question. So there are all sorts of risks that you assess, and as a business develops the way we manage it, it's about developing a project and you knock off a risk at a time. And in the environment that we've got here, where there is a shortage of capital, we've adopted a barbell strategy in terms of the stage of investment. So we'll invest in very early stage businesses, typically web-based businesses, because they're very capital efficient and you can get quite a long way on a few $100,000. And we don't have to worry, because they're capital efficient, about future financing risk. And we invest late stage in the venture. So and for us, late stage means it's the last financing round, even when you stress test the financials, and it's unlikely to need more capital. And we do that because the middle is a valley of death, and there isn't enough capital, and that's the biggest risk we worry about and avoid, like plague.
Interesting. So at the back on the end there.
Hi, my name's Chris Paul. I'm from Imprimatur Capital. It's very nice to meet people who are very enthusiastic about the early stage. My impression of what has happened in the venture capital community over the last 10 to 15 years is a progression later and later and later, so that the funding gap gets larger and larger. And in a sense, I can recognise that, which is the point made around risk, in the sense that if you need a lot of money to be able to take a business now from the start all the way through to the finish, the valley of death, and yet if you have that large amount of money, why would you take the risk on early stage? So my question is, how can you see a way that there become more ponds, there become more Amadeuses that are actually successful and willing to take that early risk? Because to me at this point, the fundamental issue seems to be that there isn't enough experienced early stage capital in the UK.
More capital in the middle to fund that valley of death, so there isn't a valley of death. I think it's as simple as that.
Well, I think it's certainly when I came into this business. I came into this business as a complete greenfield. It's a second career for me, but I was surrounded by people who had great experience. And frankly, when I came into this business, I thought investing in venture capital was like buying a lottery ticket. You kind of buy lots of them, and maybe one of them will come through. That's gambling. That's not investing. The kind of the way to do it that we find that we can do it successfully is, number one, be very, very open and completely transparent with the entrepreneur you're backing. So they know exactly what they have to achieve to get more money from us. And then you basically tranche in money and more, as much as they need to be successful as that company grows. And if it doesn't grow, everyone knows and everyone knew up front that you're either going to close it down or sell the company. And in that way, you can build a portfolio up where you eventually are putting all your time, money, and reserves into the successful ones that graduate up into later stage. And as investors, it works extremely well because we have large percentages at cheap prices of those successful companies. So I think it is very important for people to understand the perception of this business is not buying a lottery ticket. It's actually very structured investing that you do. And sorry, it's a long reply to your question. The only way that this business is going to grow, this asset class is going to grow, is if we get more smart investors coming into the business, and that's going to happen over a generation. It is already happening, it has improved in the last 10 years. And secondly, success. And one thing we're not good at in this country is heralding success. The Americans having success, and they'll flower it all over the world, and we'll know about it. Here, there's a joke in Denmark, we're not as bad as Denmark. In Denmark, in this country, if a CEO has a big exit, he'll upgrade his car. In Denmark, he downgrades it because he doesn't want anyone to know. We're not that bad, but we're not good at heralding success in this country.
It's certainly the case. It's interesting, isn't it? In America, when
it's a total attitude to success as well that I see as different.
But when there's a venture
ambitious
in America, isn't it amazing how in the newspapers, in the very first 2 lines, you've got the names of all the venture firms who back that company, whereas you read about a venture exit in the UK, and sometimes the venture firm doesn't even get a mention.
That's probably our fault as well.
I think that's right. I think the entrepreneurs are here. I think we sit in the background. I think it's right for the entrepreneurs to be here. I actually think that in a lot of these successful IPOs and so on, we don't make enough of the star status of the entrepreneur. Financial press would do well to highlight the Michael Lynch and those sort of people.
That's a British attitude to success, right?
Well, what is it?
I just observe this, having not grown up here, the Brits, and this is probably controversial, so I apologize in advance, but you tend to cut each other down.
Yeah,
You do. You bring someone down that's really on a high perch and doing exceptionally well, bring them back to size. It's a cultural thing, and it's an observation.
I'd just like to pick up on the question that you asked and that Charles answered about kind of funding businesses as they go forward. It's a Darwinian process of selective reduction. And we learned this over time. So when at Amadeus we were starting, we just pushed every business so that it could get to be really successful in that. We had a few big falls. What we've learned over time is that we fund businesses to milestones, and if they miss their milestones, once may be acceptable, but twice isn't. Or if the blue sky, that's the market potential, disappears for some extraneous reason, then we reduce the capital and we try to sort of move it to the path of selling it. We've had sort of quite good success in getting those businesses where there's sales rather than having to close them down. But it does mean that you have to go through that selective reduction so that you can really pump capital and time behind the winning companies.
Okay, I did promise a hard stop at 7:40, but Matt had his hand up a long time ago, so we'll stop the clock and take one last question.
Hi, it's Matt Oakley from Policy Exchange. Quite a few of the discussions and questions around risk and a lack of capital, and I think we kind of touched on this a bit earlier about this kind of idea of venture capital firms as being like investing in a lottery. And I just wondered whether there's more of a role for the industry in trying to change that perception and what we could do to change that perception, and whether it's about just trying to convince people that actually this is a proper industry and trying to change what people think about how to invest and how to view what you're doing.
I think we need to do a much better job of communicating.
How?
I think we need to explain what we. I think we need to explain what we do better. I remember during the bubble period when venture capital was the bee's knees, and the papers talked about adventure capitalists, and that kind of suggested the approach, and that was very informed. And there was a kind of naive hero status that was applied, and today we're just ignored. But hey, by the press, we need to get our story out. I think it's incumbent on us to do that. And we've done a good enough job at it.
I think heralding better successes. Because that encourages other entrepreneurs.
Okay, well in that case, perhaps you join me in thanking the panel.